Hello and welcome to Saturday Business Matters. I'm Nigel Cassidy. On the programme today, oil traders hold their nerve after Iran's vow to seize a British oil tanker. The US creates more jobs, but the market frets that both promise US rate cuts might not be needed. Peter Ryan from Sydney, our guest today, with Christine Spadafor from Maine. America saw just under 250,000 people find new jobs in June. It was a stronger comeback for the labour market than expected, but just to be perverse, the Dow Jones index actually fell a little bit initially, with investors more bothered about what it might all mean for two expected interest rate cuts. Well, we heard a bit of a post-holiday reaction to those job numbers. I know, Christine, we've torn you away from the last of the lobster rolls from the holiday yesterday. What did you think of the job figures?
I think the job figures were actually very positive. It is the highest number since January. And I was interested to see in which sectors had the greatest growth. So it was really in professional and business services, healthcare, which I think is not a surprise, and transportation and warehousing were the top three industry sectors. Unemployment inched up just a bit, but it's still near a 50-year low. And as was discussed, it's a question of whether the Federal Reserve will lower interest rates. President Trump did have a tweet today criticizing the Fed, as he has in the past, basically saying the Federal Reserve does not know what it's doing. And at
nice
the same
to enjoy
time,
the confidence of your president.
Well, it's always an interesting day to read the tweets, and then stay tuned to see what they might be next. But also, listening to some economists today, I have heard a number of them say that they predict a slowdown later this year, and one also just had a hypothesis that perhaps rates would come down no sooner than September.
OK, well, we'll also have Peter Ryan listening to that. Of course, Australia's had its taste of very low interest rates. And is it all good?
Yes, well, the official cash rate here that's set by the Reserve Bank of Australia was cut by 0.25 percentage point to a new record low of 1% a few days ago. And that's actually the 2 months in a row where rates have been cut. And it's a similar situation to the United States, where actually there's actually quite good jobs growth based on the month-to-month figures. The Reserve Bank's quite keen to get the jobless rate lower. But just looking at the United States, there's a lot of expectation baked into forecasts there for the Federal Reserve to cut rates. And there's probably going to be a bit of disappointment, as we saw on Wall Street earlier today, that hefty rate cuts might not be happening. But still, as we heard there earlier from Christine, that there are expectations that the US may well actually need to cut rates if they're heading towards a recession within the next 18 months or so.
Yeah, Christine, I was going to ask you about that. Have things got out of whack when Wall Street seems kind of disappointed that the rates are not going to come down? I mean, basically, this is about good job figures. That ought to be good news. But the market has just become so dependent on these low rates that some would say, it's not really taking the real economy into account.
There's a lot of discussion, particularly among all the presidential candidates right now, about whether the economy really is as good as it is being projected. And part of that goes to, is the economy working for everyone? And you don't have to go too far in speaking with a number of people that certainly the economy, as it is with rates as they are, certainly benefiting a number of people. But even though that may be the situation, there are still a number of people working 2 and 3 jobs where it's very difficult just for them to have ends meet. And so it's really about managing expectations, I think, across the entire spectrum and not just necessarily for the investor class.